Hello, everyone. Welcome to today's episode. Today is Thursday and marks another trading day of the week. So before we go to the charts, let's check fundamentals. And looking at today, we have unemployment claims at 1:30 Ghana time, and we're expecting negative news. Empire State Manufacturing Index, we're expecting positive. Fairly Fed Manufacturing Index, we're expecting positive. That's the only fundamentals we have today. So let's go back to the chart. And yesterday, you can see the market was consolidating at the top here for a couple of hours and later dropped. But at that time, I was expecting a buy from this area, right? And he failed to tap into my buy. So I couldn't buy it. Waited. And of course, I took a buy here in the morning lending session, getting to the New York 80 pips. I was targeting 45, 46, 45, but it got to 41, came to hit my break even 2 times. So I was already not in a good mood yesterday. Okay, so what is likely to happen today? Daily chart. Now, if you look at the daily chart, you can see that yesterday there was a massive push to the upside, and today you can see the massive drop as well. So today is about it has dropped 510 pips so far. The question is it really going to respect the buy, or it's going to break buys and continue on selling down? H4, if you look at H4, you can see the zone it is respecting. So is it going to respect for real, or it's going to break to the downside? Time will tell. If you look at H4, there is nothing much to talk about than looking at the 78, 45, 78 zone, see what's going to really happen there. But for now, this one is also valid, right? And you can see the market is just moving in some way right there, not really making any good moves. Yeah, so H1, if you come to H1, the market looks some kind messy, but we will be able to draw these trend lines. Yeah, now you can see trend line breakout. If you are using line chart, you can see a nice breakout right there. So a pullback for a continuation sell. First touch, second, third, fourth, fifth touch got broken. So once it is broken, then there might be an anticipated drop somewhere to the next zone like this. Yeah. Oh, what's that? Okay. Can we have something like this? Now let's turn back to candles. Good. So if you look at it, you can see a clean move right there. So sellers, I'll be anticipating more sales. And as you can see, it is already testing the level already. What can I do at the moment? So what I will do is I will wait for the market to touch somewhere here. So if I want to sell, I will wait for this level to be touched at 4600. Then I can target a sell. Don't like this trade. The reason I don't like this trade is my stop loss is going to be like 150 pips for 800 pips. I don't like it. It's good. 180. For you to be safe, this is how the setup's supposed to look like, right? This is how it's supposed to look like, but I can't take this kind of trade. 180 pips stop loss. I can't do it. So I will rather wait for the market to touch here, do certain things so that I can refine my stop loss for it to be a little tighter, 50 pips before I can trade this setup. Right. So if you look at price action, the zone has already been broken to the downside, so we should be looking for more sells. But of course, H4 has not broken yet, right? So we will have to wait for the H4 to also have some kind of break of structure. Then it will be aligned, but H1 already broken, 30 minutes breaking. So once H4 also confirms sells, then just go deep on the sell to this particular level right there. This is PiP Hunter here, and the PiP must pay. Make sure to manage your risk very well because you have no idea of which trade hitting your TP and which trade hitting your stop loss. It is only risk management which can keep you active in the game for the long run. And until then, I will see you in the next video and have a nice day.